Hello and welcome to Earnings Echo. We put together the most important information about Workday. Let's look at the hard facts first. We've got a clear beat today. Total revenue hit $2.542 billion, which is up 13.5% year over year. And non-GAAP EPS came in at $2.66.
Yeah, and subscription revenue was really the heavy lifter there, pulling in $2.354 billion. But what stands out even more is the guidance. They actually bumped up their full-year non-GAAP operating margin guidance to 30.5%.
So they are pushing aggressive growth, but still widening their margins. I mean, the market clearly liked that discipline, right? The stock popped about 4% in after hours, trading immediately following the release.
Exactly. Now, diving into the operational drivers, it really comes down to the enterprise AI segment. This is not just typical corporate buzzwords anymore. New annual contract values, specifically from their agentic AI products, grew over 200% year over year.
Wait, 200%. So they are actually monetizing this right now. That puts them near, what, $500 million in ARR entirely from AI solutions?
Pretty much, yeah. And it's driven by tangible utility. Take the Paradox Candidate Experience Agent. It is basically automating the initial screening and scheduling. They noted it saves customers over 2 million recruiting hours annually, cutting time to hire by 7 full days.
7 days? That completely rewrites the operational bottleneck for HR. It's acting like a hyper-competent digital assistant that, actually takes action instead of just forcing you to navigate clunky menus.
Right. And on the legal side, their contract intelligence agent fully automated the review of 90,000 contracts. We are talking about saving an estimated $2.5 million by just ripping the friction right out of the back office.
Which leads right into the sentiment on the earnings call. Management's tone seemed very focused on expansion deals. What did the metrics show regarding how AI impacts those actual contract sizes?
The numbers were huge. When a customer expansion includes AI features, the deal is over 50% larger on average compared to a standard upgrade. In fact, expansions drove roughly 60% of total subscription revenue growth this quarter.
So the land and expand strategy is working perfectly. Customers see the ROI and immediately buy more. But let's look at valuation for a second. If we run a reverse DCF on Workday right now, what is the market pricing into the stock?
Well, a reverse discounted cash flow model is not an exact science, but it basically reverse engineers the current stock price to tell us what future cash flows the market has already baked in. Right now, it suggests the market expects sustained mid-teens free cash flow growth for the next 5 to 7 years.
Which is a high bar, but considering their 12-month subscription backlog is sitting at $8.8 billion, I mean, that visibility makes it seem totally achievable.
Completely. The pipeline is highly secure. They have over 11,500 global customers, including 65% of the Fortune 500. So the demand is essentially locked into the ecosystem.
So the most important echo for investors today is that Workday is successfully monetizing AI by embedding it deep into core enterprise workflows. It is not a standalone novelty.
Right. They're delivering undeniable business value while keeping very strict margin discipline.
But it does leave you with a massive macroeconomic question to chew on. If these embedded agents are already automating 90,000 contract reviews and cutting hiring by a full week, how long until this fundamentally redefines the human headcount required to run a Fortune 500 back office?
That is the exact risk-reward dynamic investors have to watch going forward.
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.